finished mixed Tuesday ahead of earnings from Google parent Alphabet. The Dow fell more than 1/3%, while the S&P 500 rose marginally and the Nasdaq gained nearly 0.8 to notch a record closing high. Shares of Alphabet ended higher and then climbed another 6% after hours when it posted quarterly revenue that topped forecasts. It is one of 5 of the so-called Magnificent 7 mega-cap technology stocks to report this week, which is the busiest for S&P 500 earnings in the quarter. Meanwhile, on the economic front, the Labor Department's JOLTS survey showed job openings were lower than forecast, while consumer confidence came in better than expected. Eric Lynch, managing director at Scharf Investments, expects the economy to keep rolling.
If we, turn back in time to January, we all thought we'd see a pretty severe impact from this incredible rising of interest rates by the Fed and have a recession. And here we are in October, almost November, and we are looking at probably on Wednesday a report for GDP growth for Q3 of another plus 3%. So, you don't see any signs of a slowdown really in the economy, a cooling of the job market, but the economy still looks strong, whether it's the unemployment rate, whether it's GDP, whether it's, retail sales, services demand is still quite strong.
Other stocks on the move included Ford, which dropped 8% a day after the automaker said it expected to hit the lower end of its annual profit forecast. Shares of homebuilder D.R. Horton slid 7% after forecasting 2025 revenue below estimates. And apparel company VF Corp surged 27% to a 52-week high after the Vans maker reported its first profit in 2 quarters.
The amount of money, around $200 million, that just a few cryptocurrency companies have spent on US election donations is frankly absurd. A political group called Fairshake, with funding from just a few major players in the digital asset sector, including Andreessen Horowitz, Coinbase, Ripple, and Jump, are spending on the scale of much bigger industries, like the entire transportation or agribusiness sectors. The donations are being spent on both parties. While Andreessen Horowitz threw its institutional weight behind Donald Trump's candidacy, founder Ben Horowitz has also donated millions to Vice President Kamala Harris's campaign. The spending might be a bit overkill, but the industry is poised to get what it wants after the election, which is regulatory legitimacy. Both the Harris and Trump campaigns have made overtures to the industry, and both would be expected to be friendlier than the Biden administration and some of the regulators it has appointed. There have been disagreements and growing pains within the budding crypto political machine. Billionaire investor Ron Conway pulled his support from the group for spending $12 million against Democratic Senator Sherrod Brown, who chairs the banking committee and is seen by many in the industry as a skeptic. Still, the payoff will likely be worth it. Regulatory legitimacy would lead to a surge of institutional investment and interest from established financial players. At that point, even the giant sums poured into this election will look like a bargain.
In a move sure to rile Beijing, the EU plans to raise tariffs on Chinese-made electric cars. The new duties will range from 7.8% for Tesla to over 35% for state-backed firm SAIC. That's on top of a standard 10% import levy. The extra tariffs were officially approved Tuesday and will take effect on Wednesday. The EU says the move is needed to counter China's unfair state support for its firms, including special loans and cheap materials. It says millions of extra Chinese EVs are likely headed to Europe otherwise, with the US and Canada having already imposed their own steep duties. The China Chamber of Commerce in the EU expressed deep disappointment over what it called an unfair measure and criticized slow progress on talks over the issue. Beijing has responded with investigations into EU brandy, dairy, and pork, and has challenged the EU's actions at the World Trade Organization. European car makers are dealing with an influx of cheaper electric cars from China, which now hold 8% of the EU market, up from less than 1% in 2019. That could reach 15% by 2025, with prices for Chinese cars typically 20% lower than European-made vehicles. Some EU member states aren't happy with the EU move. Germany, the region's largest car maker, was among countries opposed, fearing its big auto exporters could face retaliation. The country's economy ministry has called for a diplomatic solution to reduce trade tensions and protect EU industry.
Google parent Alphabet says its investments in AI are paying off. On Tuesday, the tech giant beat profit forecasts for the third quarter and said sales at its cloud unit jumped by more than a third. The news drove Alphabet shares nearly 6% higher in after-hours trade. Google had been seen to lag rival Microsoft on AI, but it's spending big to catch up. Capital expenditures rose by almost two-thirds over the quarter, hitting $13 billion. Among other things, the money has been spent to beef up its Gemini chatbot. Analysts say there are signs of progress, with the firm's AI tools getting better at providing answers. Earlier in the year, Google's chatbot drew criticism for inaccurate responses, including a pizza recipe that listed glue as an ingredient. Now Alphabet will hope that AI can make up for slower growth in its mainstay search business. That unit grew by 12% over the period. Google also faces growing competition in the online advertising sector, which it had long dominated. Rivals like Amazon and TikTok have been gaining market share. Researchers at eMarketer predict Google's share of US search advertising revenue will fall below 50% next year for the first time in at least 18 years.
McDonald's posted an adjusted quarterly profit that topped forecasts Tuesday. An executive said the hamburger giant was past the deadly E. coli outbreak that hit its restaurants. Shares rose as much as 2% in Tuesday morning trading. Last week, McDonald's temporarily paused serving Quarter Pounders in nearly 3,000 of its 14,000 U.S. restaurants due to an outbreak that has killed at least one person. Quarter Pounders were being added back to the menu this week. McDonald's CEO apologized to customers for the outbreak on a post-earnings call and said he was confident in the safety of eating at McDonald's. Slivered onions used in the hamburgers are the likely source of the infection, with the Colorado Department of Agriculture over the weekend ruling out beef patties as the cause. McDonald's reaffirmed most of its annual targets, assuming no material impact from the E. coli outbreak. The company, however, admitted that it was trying to reverse the daily negative guest count and sales since the beginning of the outbreak.
Volkswagen hit another bump in the road on Wednesday in what was already a difficult week. The German automaker said third quarter operating profit was down 42%, its lowest level in 3 years. Earnings before interest and taxes hit just under $3.1 billion in the July to September period, largely in line with estimates. Its passenger car unit has struggled with high costs and weak demand in China. The operating return on sales in the core unit fell to 2% after 9 months. VW's finance head Arno Antlitz said it shows the urgent need for big cost reductions and efficiency gains. The update follows Monday's news about potential plant closures in Germany for the first time in its history. VW's Works Council said the auto giant plans to lay off tens of thousands of staff as part of its restructure. It also aims to shut 3 factories and cut salaries by a tenth. VW is locked in a battle with unions over the planned overhaul. A second round of talks with German union IG Metall is due to start later Wednesday. A number of factors have been blamed for the challenges facing the world's second biggest automaker. They include complex governance structures and misjudged investments in electric vehicles. VW has lost market share in China to local competitors offering cheaper models. Deliveries to the country fell by 15% in the third quarter. VW has also endured tough market conditions in Europe. The car market has shrunk there by about 2 million vehicles since the pandemic and led to about 500,000 fewer unit sales annually. VW cut its annual outlook twice during the quarter, and rivals BMW and Mercedes-Benz also reported difficulties. Company shares were up 2.4% in early trade, while the stock has lost about a fifth over the last year.
Chinese robo-taxis are heading to the Big Apple, but it won't be a smooth drive. WeRide snagged a valuation of over $4 billion in its New York IPO. Pony AI, which is preparing its own market debut there, was valued at $8.5 billion in a private funding round last year. Their technology is impressive. Pony AI already runs a 250-strong fleet of driverless taxis and more than 190 trucks in China. WeRide was the first to provide a paid taxi service using a high degree of automation known as Level 4. However, the business model is as futuristic as those cars. Fully autonomous technology is mostly confined to test environments. If they venture beyond pilot zones, they'll need to expand to detailed digital maps. Regulations are evolving too. That makes it hard to grow the top line and the bottom line. Both Pony and WeRide are loss-making. Meanwhile, investors' confidence in the tech is flagging. Tesla's closely watched We Robot event was a spectacle, but it didn't offer a clear path to commercialization. Peers like Mobileye and Hesai have seen their market value fall sharply in the past year. Even so, Pony and WeRide have been seeking share prices that imply either breakneck growth or rich valuations with multiples much higher than their peers per Breakingview's calculations. Unless the top line accelerates dramatically, China's new automotive upstarts may be asking investors to put the robot before the car.